Arbor Realty Trust stock, ticker symbol ABR. On the 5th of May, ABR presented quarter results where they beat on EPS and revenue. And to a lot of people, this was a big surprise. The stock went up more than 10% after these earnings in the following days. Another reason being the dividend increase of 5% to $0.42 per share. And from a dividend point of view, things look pretty interesting with dividend yields sitting at 13.65% and 9 years of dividend increases. But does this mean that ABR stock is a buy at current prices, or is it a dividend trap? Well, in this video I'm going to show you real quickly what ABR does, the most recent earnings report, the fundamental analysis, and last but not least, the dividends. And I think you definitely want to see that part, so make sure to watch until the end. And I'm also very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So, what does ABR do? Arbor Realty Trust is a specialized real estate finance company. It invests in a diversified portfolio of structured finance assets in the multifamily and commercial real estate markets. If we check the company highlights in the most recent earnings report, we see a net income of $0.46 per share and distributable earnings of $0.62, representing in a payout ratio of 68%. And with dividend yield sitting at roughly 14%, it's very important to keep an eye on the payout ratio. So this comforts me a lot. Dividends are covered. And as said a minute ago, dividends were increased by 5%, which is very nice. And right now, ABR has a strong liquidity position with roughly $785 million in cash and liquidity. They also announced a 50 million share repurchase program, which is very nice. This makes it easier to maintain and increase the dividends. When we check the quarter results in a more detailed view, we see that interest income has increased 96% year over year. However, interest expenses increased 167%, so that's something to keep your eye on. Bottom line, net interest income increased 28%, which is pretty good. Total revenue increased roughly 26%, while expenses increased 42%, so margins are decreasing a bit. The total net income increased 28%, which is also in line with the net interest income. The earnings per share also increased from $0.4 to $0.46. And the dividends increase alongside with it from $0.37 to $0.4, which is very nice and one of the main reasons why people invest in this company. The distributable earnings increased from $0.55 to $0.62, covering the dividends very nice and resulted in a payout ratio of 68% as said before. And now that we know more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analysis every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue diving into the fundamentals. Arbor Realty Trust is a 1.94 billion market cap company and PE ratio is sitting at 5.95 right now, which is of course insane low. This is also because the stock was hammered down big time in the past couple of months. Revenue is at 619 million, and in this graph we see that revenue went up really nice and steady, and in the recent quarters revenue started to increase even more. Over a longer period of time, margins are pretty steady. But ever since 2021, margins are coming down a bit, so that's something to keep your eye on. EPS is pretty much the same story. It's going up in the long run, but most recently it started to come down a bit. Price to sales ratio is at 1.86 right now. Over a longer period of time it's going up, which is not a good thing. However, the current number doesn't concern me. Analysts are not really enthusiastic about this company. They expect some ups and downs, but in the upcoming 3 years it's nearly flat expectations for both the EPS and revenue. Return on assets is sitting at 1.3%, which is really low, so definitely something to keep your eye on. And the more important number here, return on equity, is at 11.7%, which is very good. Since this is a finance company, there's no return on total capital. So that's why this number is at 0%. Current ratio is at 4.7, which is not a good number and thus concerns me quite a bit, especially since total debt is sitting at 13 billion, and I prefer companies that can pay down at least a third of the total debt with the total cash position. Right now, total cash is sitting at almost 784 million, so they can't pay down a big chunk of their total debt, which is something that I don't like, of course. So it's very important that free cash flow is growing, since this is used to pay down debt, but also to buy back shares, pay dividends and all other things. And in here we see that free cash flow is going up in the long run, but it's not always steady and consistent. Another interesting thing are the shares outstanding. It's going up in the long run to raise capital and grow the business. But when shares outstanding are decreasing, it increases your ownership in the company, increases EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyway, dividend yield is sitting at 13.65%, which is a really high number. Annual payout is at $1.68 and payout ratio is at 68% as said before, and not the 98% displayed here. I prefer 15% or lower, so right now they have roughly 32% left in cash to buy back shares, pay down debt, acquisitions, research and all other things. To me this payout ratio is too high in general, but keep in mind that it's all about the high dividend yield with this stock, so it might not be a problem. The 5-year growth rate is at 15%, which is a great number. On top of that, they grew the dividends for 9 years in a row, which is also pretty impressive. Overall, these dividends look pretty good to me. My final conclusion on this stock is that I really like the dividends, of course. It's at an insane high number and comes with some risk. The earnings were pretty solid, and every now and then I'm questioning myself whether or not to sell this stock, because of the risks that are attached. As long as they keep performing, I don't think I will sell, but analyzing them every quarter is a must for me. For now, I'm not buying new shares because of the high risk and since they are already representing a decent amount of share in my portfolio. I will keep collecting the dividends and analyzing them after every new quarter report. And remember to also do your own research and never fully trust on what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.